So, like I always do, let's just start off with the DXY on the weekly time frame. Okay, so by starting off on the DXY on the weekly time frame, you'll just get an more or less, you'll get all the targets, and you'll also get the DXY correlation straight through to the other pairs, which we are going to talk about on, and the other market relations. And I always talk about the DXY, not to trade it. Of course, I don't know if you can even trade the DXY. Like, I've never even looked into it. But this is just a measuring point, or yeah, you have talked about DXY. I'm completely like, I'm saying DXY down, and I'll explain it why. Like, I'm just following a bias. I'm not trying to pick top and bottom, so I'm just following the overall bias AR. You also gotta focus on external ICT AR. So then you, like, if you look at the DXY relations with the things that it correlates with the DXY, you can see that we maybe will, like, if you look at those, everyone has said like DXY should go up, right? Like with this weekly right here. But if you look at the external things, you see that those are really bearish. And I'm thinking that if you look at those higher time frame, then you will see that we will most likely continue lower for at least one more week. Right here, maybe it could react with it, and I'm talking. Oh, I'm at the 4. Yeah, the 4 hour should be bullish. Yeah, the 4 hour should be bullish. I'm gonna talk about it. Okay, let's just go straight into it. So, like you see right here, we took out this. Trendline liquidity right here. Also, this buy side, all those buy sides, liquidity points. These relative equal highs reacted with this algorithmic order block right here. If you go into the daily, which I will talk about, we reacted with 1 pip, or I don't know if this is pip, but in the FX market we talk pips, but with 1 point, with a weekly new week opening gap on the DXY. I'll show you later. I'll talk about it back then, and I said that we would most likely be turning bearish, just because I also looked at the things that correlate with the DXY. Not the markets, not the FX market, other things, which sort of controls the sentiment of the DXY. But you can see we consolidated for a few weeks. Here I didn't even take one trade, so up here didn't even take one trade. Like here I started taking trades. But yeah, overall weekly bearish, I would say. Last week we reacted off of this fair value gap right here, took out buy side liquidity right here as well. Also made an SMT trap and consolidated a bit here, so we made this is high resistance liquidity. And then yeah, we have this fair value gap. This is the only imbalance we have in equilibrium. I was looking at this last week, so I had this or 3 weeks ago here. That week 49, you can go back and check it. I had this as my drawn liquidity, or this sell side as my drawn liquidity, and this matches up with the 75% mark of this fair value gap right here. So 75% mark I had of that fair value gap I had as my drawn liquidity. Right now I have my drawn liquidity, more or less weekly drawn liquidity here. My ultimate drawn liquidity is down below here, so I'm thinking that the DXY will actually continue lower, but okay, it could react with this and go bullish, okay? And that's why I don't try to pick tops and bottoms. I don't try to speculate so much. I just try to see where the most probable weekly candle will be, or like if it's going to be bearish weekly, like if the next candle will be bearish or the next candle will be bullish. And I'm thinking that the next candle will be bearish as well, just because it's a high probability that it will be bearish. But yeah, here, if we go into the weekly, just really quickly, you can see this weekly fair value gap right here. Going into the daily right here, you can see that we had actually an algorithmic order block. Market ended up taking out Buy side, okay. Buy side liquidity right here, high time frame, buy side liquidity. And then started just consolidating. I thought the market would actually turn down right here. This was Thursday last week. So I thought that we would actually turn or continue lower, but then we got news which was bullish. I think it was CPI news last week. They came out bullish, and it actually made an SMT trap right here, smart money trap. Yeah, maybe, yeah, because like, yeah, I was thinking like SMT divergence, but yeah, this is an SMT trap. Yeah, and then the FOMC came out, and I've talked to premium like why the DXY is moving. So like the FOMC came out as bearish just because they talked about lower interest rates. The market just collapsed, gave us displacement right here. We have a new day opening gap right here, so it gapped down. So just keep that in mind. So what I'm thinking, I'll talk about it later. And you can see that the daily is also bearish. But going into the 4 hour, here's the drawn liquidity for next week. So here's what I'm thinking. So you see, just draw out equilibrium. So you see right here, okay, this is the possible ways the DXY could go. High time frame, I am bullish. But like AR talked about, exactly. So what I'm thinking is that we may be gonna see a reaction off of this new day opening gap right here. So have this annotated, have this new day opening gap annotated right here. Okay, this is not in equilibrium from that move. You can see right here, from this move, it's not in equilibrium. So I'm thinking that depending on how bearish the DXY will be, we're most likely gonna see it react with the 25% mark of this fair value gap. Okay, remember this is a fair value gap on the daily time frame as well. So going into the 4 hour, I'm thinking that we will actually, most likely, probably, like there's three possible outcomes, okay? So I would say, if it's really bearish, I'm gonna say it's reacting with the 50% mark of this new day opening gap. Okay, I'm not seeing it react with the first, like the 0% mark of that new day opening gap. I'm seeing it react most likely with a 50% mark. You can see that we are most likely going to retrace a bit, and I'm thinking in equilibrium, and this is not in equilibrium, right? So then, okay, depending on how bearish we're going to see the DXY being, it maybe wants to react with the 25% mark. I'll annotate this. I think you all could have it annotated like this. Here you have the 25% mark, so market maybe gonna react with 25% mark or the 50% mark of this fair value gap, okay? I'm not seeing it react with this. If it's really bearish, it's gonna react with this and take out this sell side right here. But I'm thinking that we will retrace onto the 25% mark, but the more likely option is a 50% mark of this. So we're gonna reach for a deep premium on the DXY. And then continue lower. Okay, I'm seeing the weekly expansion is going to be bearish, right? So you can have this annotated. I'll just have this standing for a while. And you can also see that the 4 hour is actually bullish. And the 1 hour is most likely also bullish, yeah. Here you also have a gap, so you can annotate this gap as well. But maybe it's going to react with this gap right here. But I'm thinking 25% mark or 50% mark is the more likely option. Now, okay, have this in your head, okay? Have this as your overall, I would say, structure. So have, like, remember what you want to see on the weekly expansion, like a weekly expansion, the daily expansion, the 4 hour expansion, and also maybe the 1 hour. But more or less these 3 high time frames. And then just have this as an anchor. I don't know what it's called in English. Have this as an, for those who speak in Swedish, as an ankare. To like more, let's see where the other pairs is going. But now let's just go into EU. So I'm thinking on the weekly time frame, you see we are bullish. We have not reached for this drawn liquidity which I had. AU reached this drawn liquidity, but EU have not. So I'm still having this as my drawn liquidity, like the previous weeks. These 2 previous weeks. This is my high time frame drawn liquidity. Like this is my ultimate drawn liquidity. This is my lower time frame drawn liquidity, or not lower time frame, like intermediate time frame. I would say. I call this lower time frame just because I'm so much on the high time frames. So I'm seeing the weekly expansion maybe reaching for this. Okay, you never know. Like this is pure speculation, and of course, if you're watching the videos, I'll read all disclaimers. Okay. So here we have a fair value gap. This matches up with the 25% mark of this fair value gap. After this gets taken out, this buy side of this 25% mark of this fair value gap, or CB. Okay, remember also we have this, and we have offered sell side to that buy side inefficiency. So just keep all the things in mind. But after we have taken up out this buy side, we may be gonna react with this and turn and like continue lower. But this just depends on what the DXY does. Okay, so I'm having this as my intermediate time, the intermediate drawn liquidity. Otherwise, yeah, the weekly I'm seeing will be bullish, right? The daily time frame. Okay, we are bullish on the daily time frame. If you draw out equilibrium, bam, like this is pretty simple. I'm thinking that we will reach for this fair value gap. So maybe on Monday we will be bearish, but the rest of the week we should be bullish. I'm thinking that we will be bullish, and then maybe target these equal highs, because now the market have actually created equal highs as well here, and then maybe continue until this drawn liquidity. So Monday, maybe bearish price action, react with the 50% mark of this fair value gap, continue higher, taking this equal highs, and ultimately taking this drawn liquidity right here. Okay, so pretty simple, and this matches up with the DXY. Just because I'm seeing the DXY moving up during the first more or less half of the week, and then a big downwards momentum. So here you have the daily fair value gap. You also have a 4-hour fair value gap right here, and this is in equilibrium. So this is the first fair value gap on the highest time frame in equilibrium. So I'm using this 50% mark of this, so down and then maybe up. We'll see. But this is the most probable outcome. So on the 4-hour you can see that we are actually still bullish, and on the 1-hour we maybe are bearish, yeah. But remember all these equal highs, this lower time frame equal highs, and also remember this high time frame equal high, which the market most likely is going to reach for next week. So you have a clear lower time frame. This is my lower time frame, intermediate time frame, drawn liquidity. So it's pretty simple, bro. This is looking perfect for next week. Okay. And now we just gotta have good price action as well. So looking at AUD USD, yeah, EU looks beautiful. Okay. Look at AU, bro. Now AU is gonna be the one destroying everything. So I actually reached for I'll talk about it, the intermediate draw on liquidity which I had. But yeah, AU looking pretty bad. But you can see weekly, I would say overall bullish. We reacted off of this fair value gap. So if you just draw out this fair value gap, I'm thinking that we will maybe reach for these equal highs right here. Like ICT says, like straight line likes to get jagged. So this matches up with the ultimate drawn liquidity for EU. So this is my ultimate drawn liquidity for AU. These equal highs right here, and then maybe we're gonna see lower prices. Okay, but this just depends on. Yeah, I'm thinking that we will actually reach for high prices, but we'll see. AU is the lacking pair. Like overall, AU is the lacking pair. So at least for the one I'm trading. So the daily is pretty simple, also bullish. This was the thing I was waiting for. See this fair value gap right here? See this, not this. Oh, we also have equalized right here. See this drought fair value gap right here. Drought liquidity or buy side liquidity right here. You'll see it matches up with 50% mark. On EU it was the 25% mark, but we actually took this. But I'm thinking that we will still continue higher. Okay, so maybe retrace into this fair value gap right here on the daily time frame. So if you draw out equilibrium, or yeah, of course equilibrium, because you're always gonna buy in discounts. Okay, so maybe 75% mark of this, because like remember, you never buy in an premium. Like you never buy in the like. Remember, this is overall bullish, right? So you're never gonna buy in an premium. Okay, if you're bullish, if you're overall bullish, you never buy in a premium. Okay, this goes for every time frame, so this is universal. And you just want to buy in a discount, right? Yeah. I just need to check my wording. Yeah, but I think that's correct. Yeah, but we're most likely gonna see it to return to equilibrium. Discount. Okay, when I say equilibrium, it's the opposite from the direction. So hopefully you understand me. I'm just saying it just because I feel like it's much easier to say it. But you can also see that we have actually consolidated. So we may be going to see an ICT power 3 lower time frame on AU. So my next drawn liquidity will of course be 50% mark of this wick right here. So wait, I'm just in need of having this perfect. So I need to do this. Draw on liquidity right here. This is going to be my intermediate draw on liquidity. This equal high time frame equalize is going to be my ultimate draw on liquidity. But overall, daily is also bullish. Okay, I'm looking at the 75% mark of that fair value gap. So I have that annotated going into 4 hour. You can see consolidated. So we may be going to see an ICT power 3, 75% mark. Reach for this, so I'm seeing this maybe forming. We'll see. Like this is total speculation. Maybe gonna, and yeah, also this actually matches up with. See how price is so algorithmic. So yeah, see this. So if you go into the 4 hour, you can actually see that this is what's the daily fair value gap right here. Okay, look at this, even perfect. This is the 75% mark right here. Like I said, most likely gonna reach for 75% mark. That's in equilibrium, right? And that's the zone that is yeah, that zone is in an overall discount, like from the daily move. And you also have this 4 hour 50% mark right here. So 50% mark right here is most likely gonna have the reaction going higher. So maybe higher time frame, ICT power 3 with consolidation, manipulation, distribution. Hopefully you understood it. Otherwise, I'll actually have this more. I'll actually have both of these. Why not? Why not? 1 hour. Yeah, you maybe already have seen it, but overall I'm thinking that maybe have a reversed ICT going in the opposite direction of the bias. So we're maybe going to take out all of these like equal highs, I would say, or trend line liquidity, and then go down, then maybe create another ICT. We'll see. We'll see. But yeah, we are actually, I don't know, I would say just consolidated on the 1 hour time frame. Otherwise, thank you all for listening in.